Make sure everything looking alright. Make sure everything looking alright. All right, cool. So we got the market is pretty green so far, man. Google is at an all-time high. It's been just going crazy all day. It's up $62. Um, yeah, could have rode this wave, but it's at an all-time high. Well, not an all-time high, but a high. I'm not a big fan of getting in when things are at highs. I would wait till they go back down and do it like that and use it as a resistance for the next run up. Tesla been doing this thing today too. Tesla up $11. It's been kind of going. It's been negative for the last week pretty much. So I'm happy she's just going up. We got SPY doing this thing. It's been going up today. It started off at it's up almost $4. At 4.19. So that's good. And then we got Amazon trying to get his feet wet. Let's see if it has some resemblance to Google by the end of the day or not. It's only 7:19, so we still got a few hours to go in the day to see how things will end up playing out. But yeah, so basically I got into Amazon today. I got into Shopify earlier. Let's look at Shopify real quick. So it's at a high too, and they got to 12.62. I got out early though because let's look. I made a mistake, right? And yeah, I got into these longer calls when I should have just been here. And so I usually have my thing already set up on the weeklies, on the closer expiration date because it's cheaper, right? So check this out. You gotta multiply these by 100 because each option is 100 shares. So if it's $31 a share, you got 100. Then this is actually, 3,100, as opposed to this same one is 4,800. So that's $17,700 per contract, and only difference is the time. And so I had it pulled up like this because someone had mentioned I was looking at it. I never switched back, and I ended up buying these longer expiration date contracts, and it costs more money, which isn't necessarily a problem. I mean, I'm making the money either way, but it's just the upfront cost, and I could have just bought more contracts. So yeah, that's one thing to be mindful of for sure when you're looking at these contracts. Make sure you checking out. You make sure you click the right one, like you say. This shows it's 4 days left. It's 11 days. This pretty much just shows the amount of days left. The longer time you have left, the more they cost because it's giving you the chance to, make more money. So the more days you had, the more opportunities you had to make more money in that with those contracts. So it costs more money. That's just how it works. But we pretty much made our 2,000 for the day. That's kind of my minimum goal for the day is to make 2,000. So we made our money. This could be beneficial. I mean, I guess it is a Monday. We got 11 days. We at 32, 35. Maybe super long hold this. Let's look and see the 10-day chart. In the last 2 days at a higher 33.12. So as long as this stock keeping this and keep in the day green, we could potentially just hold this stock and ride it all the way up and see if we get reach this point or get a new high. So in 11 days, Amazon can go up like a normal day like this, $40, $40, $50, $60. I've seen it go up, $80 before. So it's very possible that we could be here. Maybe tomorrow we can keep going up today and reach this high tomorrow. Let's look at 20-day. Last 20 days it reached 36. So this is kind of what you might want to do when you're looking at the stock more long term. Since we happened to buy that 11-day call, that's more long term for me. So if I would have got what I originally had planned to do, the 4-day, it's possible that I might have just got out of that today and just took my profits, my little $2,000 profits, and then wait until tomorrow to play the market and see what presented itself. But since we got 11 days, that gives me a lot of time to see what's up with the stock. And we, like I said, that's a lot of room to go. That's over $400. If that'd be a lot of money, guys. Trust me. If this thing went up to this, back up to this high over these next 11 days, that's a 6-figure payout right there. So that's just something to be mindful of. This was the low. So hey. If you are in the course, you probably seen the video how I go over, how to set all this stuff up and the tools and functions. But this is where you kind of change the time frame of the chart. So right now I'm at the 20-day, 1 hour. So each ticker is 1 hour symbol, and then it shows the last 20 days. It gives you a better understanding of how it's been trading the last month. So if you're thinking long term, you might want to go ahead and look at the 180-day. That's 6 months. So we still got that same high. It was a good spike. We get another about 35. You know what I'm saying? So look at these. So it's reached well past where we at now plenty of times before. So it's not unreasonable to believe that it could, potentially have that effect again. So yeah. And then, for more daytime, I stick to my 1 day, 1 minute, just show how it's been doing today. In the last minute, each ticker symbol is 1 minute, so it gives us a better understanding, a better way to check and see how that stuff is maneuvering and what's going on with it. Man, SPY really went up $2 since I was just looking at it. SPX really ended up going up too. That's interesting. Alright, let's go ahead and look at this. Thing is slowly rising up. This is another cheap stock that you can make some good money on. The cheaper the stock, usually the cheaper the contracts are, so you can just buy more of them. That just gives you more leverage to do stuff with. So there's not much to it. Nothing really crazy to it. You build out you a watch list of stocks you might be interested in, and this stuff will show you if they up or not. It's not gonna look like this every day. Some weeks may be red for the most part. The whole stock market may be red. And that's where you gotta have understanding the confidence to play puts. Because if you are somebody who's like, I only play stocks when they go up. I mean, that's cool. That works for some people, but it can limit the amount of money you could actually end up making. So, yeah, I'm not buying these all-time highs. But yeah, this thing definitely been rocking. Been rocking. Mm-hmm. So yeah, there ain't nothing too crazy you need to worry about. Tesla really surprising me, but I'm happy for him because I actually own shares of Tesla in my long-term portfolio, and Tesla goes up, then hey, that's cool. I appreciate it. What's today? The 24th. So at the end of the month, for me, I like to. That's when I pay myself and then distribute my funds the way I need to. So I keep 40% in this portfolio, and I keep 50% in my long-term portfolio, and then I pay myself 10%. So that's how I like to distribute, whatever I earn for the month. And now you take it out. Because I also, me personally, I also like to build a long-term portfolio and build up those dividends so I can get paid, either monthly or quarterly, and then let it compound and keep building up. And then over the next, few years, let it lay like that. Because there's people making, 5,000, 6,000 a month just off of dividends. That's a lot of people's wages. That's more than a lot of people make. Making 70,000 off of dividends. And dividends is just a payout you get for owning shares of a stock. And that's something that you don't have to even work for. And if you don't necessarily need the money, you can just reinvest your dividends, right? And that's just going to keep compounding over time, more and more. So, yep, that's the bonus. And then the stock itself can just go up. And since you own shares of the stock itself, you also get paid for that. So it can be a double warning, man. Good morning. So, yeah, Google went crazy today. Google really was bad. That's how you would want to set it up. So if you were able to start trading, I would suggest doing it like that. Have some sort of plan. Don't just pay yourself all the money you make, because then you never gonna be able to really scale up, right? You want to have your active money, and you want to have your semi-passive money. So the stock market has two different sides. Like, that's why it's beneficial if you want to play both. You can do what I'm doing right now, which is, somewhat active trading, and then you can have your passive side, which is your long-term investing, where you hold your stocks and then reinvest your dividends, then build that portfolio up. And then, like I said, maybe pay yourself, the 10%, so you can have a little fun, do a little something. But it's important to have a rule set. You don't want to just be like taking money whenever you feel like it, and paying yourself however much you feel like you deserve to get paid that month. You want to have a set amount you pay yourself. So I only pay myself 10%. So if I make 40,000 that month, then cool, I give myself 4,000. Then I put 50% of that money to my long term, and then 40% back into my day trading or options account to increase the balance in that, and therefore get more shares and more contracts to make more money the next month. And you keep doing that over and over and over, and that's how you end up making more and more money. Let me go ahead and hide that. But these stocks go up and down. For the most part, they usually don't just always go up. They fluctuate, as y'all can see. Like just a couple minutes ago, we dropped to about 42,000. I had this little quick spike to 43, which is cool, because that stuff is expected. Just look at this. Even though this is up $57, I had times where it went down, and as long as you up overall, you will have to look and learn to what your risk tolerance is and what you're willing to leverage on each trade, right? It's like I was saying earlier, because I got the 11 days out contract, which means I have 11 days till my contract expires. That just gives me more room to, watch this play out. 11 days is a long time, especially for Amazon. Like I said, this thing can go up. This thing can be up $400 by then in 11 days. That's possible for this stock. So as you can see, I had a alert of 3505 on this stock before. And that wasn't too long ago. I think this was last month. So that just goes to show you that at some point Amazon was at, 3505. And that's why I say it's also good to have puts. Because just like it can go back up to this, it can go back up to this, and they dropped all the way back down to be able to reach this level, right? But that whole time it was dropping down, you could have been playing puts and still making money. So people think, the stock market is red, that it's a bad thing all the time, and that's a misconception. But when you trade options, it gives you the ability to profit off of whether the stock goes up or down really don't matter. As long as you can catch, and ride that wave and know what you're looking at, then you can make money on both sides of the field. That make you versatile. It makes you a threat for real. So you trying to have a triple threat out here, man, just like basketball. There you have another thing, right? When you go into talking about a long-term portfolio, whenever you own over 100 shares of a stock, you can do things called covered calls or covered puts. And what a covered call is say I own 100 shares of Amazon at 32.50. I could then potentially do a covered call and say that if it goes to 35.05, that I'm willing to sell my shares at this particular price or whatever the case may be. And if somebody believes that it's gonna go up to, let's look at this again. So I'm saying if it goes to 35.05 by the next 11 days or something, right? Say I had doing a cover calls, I had actually owned 100 shares, and this person looking at this and they saying I think it can go up to this. They might buy that cover call to buy that 35.05 the next 11 days because they assume it's gonna go up to this. This is the risk of cover calls. But at the same time, if you bought at 32.50, by the time you get up to here, you made so much money, you don't really care. But the other kicker is you can get premium. So this person might have to pay. He might have to pay you, $5,000 up front to buy this contract to potentially get it at this price and ride it up to this price instead of buying it up here. So if he pay you $5,000 now and it goes to 36.67, instead of him having to pay this price for the stock, since he bought that covered call from you, he can pay this price for it. So potentially a win-win. And if it don't go up to this, then guess what? You get to keep the 5,000 and your shares. So we'll talk about that another time. That's not something you necessarily need to worry about right now, but I thought it was cool to mention it just so you can have that framework and start and that give you something to think about. There's a lot of ways to make some money. A lot of ways to leverage what you have. So yeah, guys, man, we had 4,000 for today. It's still early in the day, and we still got 11 days to go. So, let's just say we potentially made 4,000 each day. Well, hey, that's 40,000. And so we'll see how this plays out. It's still early. I may potentially get into something else. See, I'm almost done. These are entry points. Double green markers. It's past the 180-day EMA or SMA. You see how it's fluctuating now. We don't have no confirmations. None of these are confirmations, right? So because there's only a confirmation to get in if it's past this red line is the 180-day EMA. The green one is the 9-day SMA. Simple moving average. This is the 100-day simple moving average. Once it crosses this, going upwards, we want to see, at least 2 green candles not touching this line, independent of the line. These are good, buy signals. The stock is probably going up. Although me personally, I'm not a big fan of getting into things this early in the market. The market opens at 6:30. This is the first 5 minutes. This is, I would say, the most. The first 30 minutes are the most volatile. So, meaning that this could easily go back and do something else. What time is it? It's 7:44 here. The market is kind of mellowed out. So, for the most part, what you see is what you kind of get. These stocks would probably be, especially these, be green for the most part of the day. And the market itself is green for the most part. So, a lot of things to win in. But let's say you got to looking at right here. These would not be good times to get in, at least with the method that I follow. Because as you can see, even it's not two of a kind. These don't come because this one is obviously on the line and this one is touching the line. So none of these will quantify as a good time to get in. Because these could easily, go the direction or do something else. Okay. Out here we see some movement. It's at 31. And then you could roll to this and made 32. But like I said, I'm not a big fan of playing highs. Look at this on Google. Google up $59, but there's people in the world who seen this. Oh man, Google's at a high, and they bought right here, and then they lost money. So now they feeling stuff. Their whole day probably ruined. There's probably a lot of people in the world who seen this was high, and they was like, man, let me get in, thinking that it was just gonna keep going up, and it didn't keep going up, and that's a possibility that you gotta be willing to let ride out. But hey, look at this right here. That's a buying signal. Still early, but hey, maybe you was feeling that way. Buying signal, you know what I'm saying? Maybe it's still early, but okay, cool. But this would have been a nice little spot to get in. Say you got 32.40, you could roll it, a little $15. And then hey, okay. So that's all it is, man. Nothing too crazy. Nothing too. I'm probably gonna take my morning walk in a little bit. And if you watching this, you just coming in, like we talked about earlier, look, this thing, bounced out. But at the same time, I got 11 days, so it's like, what could you? That's a long time. Now, let's say, I mean, I'm pretty confident this is gonna stay green and end up going up some more today. But let's just say, for some reason, if the trade wasn't beneficial no more, I could just easily get out this trade, collect my money again, and then, see what else I want to get into. Because luckily, if you are starting out and you don't have, you will be subject to the PDT rule. So your account won't look like this. You will have like another bar around here that says day trades, and you will have a number. Each week they start you off with 3. You get 3 day trades. And what that means is if you buy a stock and then you sell it the same day, you buy and sell the stock the same day, then that counts as a day trade. And you only get 3 of those per week. After you use up your 3, I'm saying, it's not recommended to buy them more. They'll flag your account if you try to day trade again. And so, when you're doing that, you gotta be a little more cautious of when you win again and when you don't, because you only got 3 trades, day trades. Now you can buy a stock today and then sell it tomorrow and do that all you want. You know what I'm saying? You can buy 5 stocks today and then sell them on tomorrow, and that won't count as a day trade. So that's to be mindful of. But you need 25,000 in your account, and then you won't have to worry about that. And so I'll keep 25,000 in my account minimum, just so I don't have to worry about the PDT rule. And I think the logic behind it is that if you had that money in your account, either they either thinking maybe what you're doing, or you can afford to lose money. So they probably thinking like that person is good. But what it allows you to do is, make more plays during the day. You can maneuver a little bit more, because like I could sell this, take my profits from this, and then buy something else or buy it again and keep selling it all throughout the same day. So let's look at Google, for example. Let's say I had got in back here at 23.30. Boom, rolled it all the way up to wherever it is right now. Then let's say it started dropping. Well, I could sell this. That would be a day trade with PDT rule. I don't have to worry about it. I could sell right here and then buy puts, ride it all the way back down, and then sell it again, and then potentially ride it back up again, all in the same day. So that's the benefit of that. Amazon, having a little dippy dip. Which is cool. Let it do its thing. But if Amazon was to drop to the point where I was at less than 52,000, I might consider getting out of it and just, looking into something else, because I'm not really trying to be stuck watching this for 11 days, to be honest. Unless it's going up. If it's continually going up and, making more and more profit, then it's just end up being nice in the long run. But if it ain't making no cheese, then I might as well hop out of it. And if it's losing money, then I might hop out, consider maybe I can get some puts. But we try to find a red stock for you. You know what I mean? These are really red for real. But I guess I could go. Let me see. Okay. Show y'all what it would look like when this stuff is really down. This happened aftermarket, but check this out. This is just like when I say you want to see the 9-day SMA cross the 180-day SMA going up, and that's when you want to start, looking to get calls for the most part. This is when you might want to start looking to get puts. The 9-day SMA cross the 180-day SMA going down, signaling it's a downward trend, right? So boom, just like we got the green ones when it's going up, we want to see the red ones when it's going down. So it crosses right here. These aren't necessarily confirmations. These aren't. But then we get, something like this. That might be a confirmation. And that's at 415. Okay, it kind of goes even for a little bit. Drops to 412. 11. And then we have a spike right here. All the way to 409. And for SPY, that's a lot. I kind of, since SPY doesn't move a super amount, you can buy more and more of the shares. For each dollar that it goes up, I kind of multiply by 10. So let's just say this is at 415 and you 411. That's only $4, but you multiply it by 10, that's $40. So yeah, that can easily be a lot of money right there if you could have wrote that. You know what I'm saying? And then it's still you could have swing traded. You probably have it for a couple days. And so it closed. It was still it was still in the red. So if you would have got in, you obviously wouldn't get in right here because it's aftermarket, but let's just say you did for the sake of this example. You'd have been good. It closed at about 414. But you put your put in that, so you still made some money. You like it closed red. Maybe you want to risk it and swing trade it. If you would have swing traded, you would have boom. This thing dropped to 405. Sheesh. Yeah, that's a big move. It's a big move. Yeah, just like we talked about risk tolerance, right? I was just saying if it goes, below 52, wouldn't look to sell, but just like it didn't have a confirmation. So even though, these were all kind of going down, it didn't really have a confirmation that it was going to be a long-term thing. Because for one, it's still above the 180-day SMA. It would have to drop all the way down here to even cross the 180-day SMA before you would even start to really seriously start looking at puts for real. But no, I never did that. Never did. But yeah, that's kind of what the market is going to be doing for the day. Man, SPX really went up. Shot went up. Stuff is going up. So that's a little quick live today, guys. We've been live 42 minutes, man. Time be kind of flying. But I gave y'all pretty much a little decent hour of what's going on. Yeah, the stock market so far. Probably won't be any major changes till maybe 11. 11 o'clock my time. I think that's probably 1 o'clock if you're on the East Coast. But yeah, so the stock market has its own little phases. You got the morning phase from 6:30 to like 7:30. It's still kind of early market, a little more volatile. After about 9 o'clock, usually the stock market kind of mellows out. Not too much traction after that at that point, and then 11 can be a little bit of change, and about 12, which is the last hour of the market. So it ends at 1 for me, and so if you somewhere else, it might be in that 4. So that's use these time frames with discretion. You add your time difference on, of course. But for me, after about 12, that last called a power hour, and those, it can be just like in the morning, it can be volatile that last hour to see where it's going to end up closing at. So it can either go up a lot or go down a lot in the last hour. So yeah, guys, we'll do another breakdown tomorrow just to see what's going on in the stock market, what I got into. As you can see, there's always opportunities. We made 3,000 today, and I really could have made a lot more if I had say paying attention. My regional position was in Shopify. This thing went up a lot more than I ever had expected to, and I should have just held. But I believe I was in the 40s, and it went up to ended up going up a lot. But here's what it is, guys. And yeah.